In this video, I'm going to be talking about a big mistake a lot of people make when they're investing the money, whether it's in the stock market, real estate, or whatever investment they're trying to make, is trying to time a market crash. And I'm going to give you 4 reasons on why that's a very big mistake. Hi, my name is Pascal Manigat, and you're watching the Financial Ownership Podcast. So there's kind of this idea that you could put your money into savings or in cash or whatever it is, and just wait for the market to dip and go down. And then after you see the market dip or go down, that's when you could use that large amount of cash to invest into, stocks or whatever asset class you try to invest in at a discounted price. So a big reason why I disagree with that is because I think you should always have some position where your money is growing with the markets. And you should always be consistently either investing in the stock market, the real estate market, or your own business, or whatever investment philosophy that you have. You always should have a position where you're being aggressive and taking calculated risks and making smart investment decisions on the money that you have and are planning on it growing over time. It doesn't necessarily have to be the stock market, but it should be something that at least paces with inflation or outpaces inflation that you can do every single year. You don't want to have all of your money in a savings account because inflation is taking money from your, and that's actually one of the reasons I'm going to get into. But you always want to make sure that you're hedging against inflation risk and your money isn't just going down in value and you don't have any plan for it over time. So the first reason is because of long bull markets. So if you look at 2010 up until 2020, and if you want to even extend it even to 2021 and 2022, it actually further proves this point I'm about to make. We've had one of the best bull markets in the past 10 years. And if you were to time the market, trying to time the market from 2010 to 2020, you would have missed out on one of the best bull market runs like in history, honestly. Because if you look at the stock market has returned about 14% in the last 10 years. And you wouldn't have had the growth of any of that if you decided you wanted to time the market and wait for, say, a crash to happen where stock prices or real estate prices are extremely undervalued. And that's kind of the problem when it comes to waiting for stocks to crash or waiting for something to crash is you don't really know when the stock market is going to crash. Not Warren Buffett, not any type of financial expert. You might hear a bunch of different opinions of people saying that the stock market is going to crash. But a lot of times, these experts are wrong. They say that the market is going to crash at a certain time, but a lot of times it doesn't even happen. So trying to time the market is a very impossible thing to do, and it's always good to have some position where you're hedging against inflation, hedging against all the natural risk that happens when you have your money in cash. Yes, you should have some savings, and yes, you should have some money protected from market risk where you're not scared of the market going up or down. But at the same time, you need to have the upside of the real estate market and the stock market, or one or the other, to have the upside of those markets because those markets historically hedge against inflation. And actually, in the end of this video, I'm gonna link a video with something you could watch on how you could hedge against inflation and hedge against all these risks, market risk, tax risk, and all these type of things, and not have to worry about the stock market crashing at all, and still get gains on your money. And I will link the video to the end so you could watch that. But in this video, I'm just gonna be talking about some of the reasons why you shouldn't wait. And that's actually probably another reason, because there actually are vehicles out there where you could get the upside of the real estate market or the stock market and not have to worry about losing, say, 10-20% of your portfolio due to a market crash. I'm not going to get too much into that in this video, but I'll go over some of the reasons of that. If you want to learn more about that, you should definitely watch that video at the end. And the second reason, like I mentioned before, is inflation. So if you look at inflation now, right now inflation is at kind of like a 30-year high. It's about like 6.8% if you look at the inflation stats as of recent. And inflation is only looking like it's gonna be this wild for some time now. And if you think about it, the more you're in cash, the more you're sitting in cash or in fixed income that doesn't beat inflation, if you have it in a savings account or some type of account where it doesn't have the upside of the stock market or real estate market, you're basically putting your money in a place where you know it's gonna go down in value. Think about it like this. If you had a stock market fund, or you had some type of stock that you bought, would you keep that stock in, like, if you knew that it was gonna go down in value, would you keep that stock for long periods of time? If you knew that stock was going to go down 3% every single year, you probably wouldn't keep that stock for a long-term period of time. It's the same thing with cash. Think about it as a depreciating asset that is going to go down in value, because it kind of is. You know that cash is going to go down in value because of inflation, because as inflation climbs higher, your dollars are only going to be able to buy less. So that's why it's important to have liquid cash which is protected from market crashes, but you also want to make sure you're hedging yourself properly against inflation, which is another risk for your money. Think about it like this. Cash is risky in the long term, but safe in the short term. Stocks and funds, like funds of good stocks and funds, are risky in the short term, but safe in the long term. Because if you look in longer periods of time, 10, 20, 30 years, these things historically hedge against inflation. Like common stock, if you look at it, if you look at the book, if you ever read the book Intelligent Investor by Benjamin Graham, he said that 78% of the time, the common stock outpaces inflation. So if you think about it like that, if you really want to hedge against inflation, you want to figure out a way to get the upside of the financial markets. And the third reason, if you ever notice people that are successful and people that really know how to make money, it doesn't matter what economy they're in, they always make money anyways. And you want to know why? It's because they're consistently investing in businesses or different types of asset classes that they understand. They're not in conservation mode all the time. They know the risk that they're taking and all those type of things, but since they have the expertise that they could sell, or some type of specialty that they have in whatever it is, their business venture or some type of assets that they know better about than other people, they're not afraid of taking that risk and putting money into places that they believe in long-term are going to return over time. So the thing is, nothing is a better hedge against any type of market than having an expertise or specialty in which to. So always make sure that you're investing into your knowledge, investing into your skills, and investing into your business. So no matter what happens with the stock market, the real estate market, or whatever market that you're analyzing and looking at, you're able to make money at will, and you're not afraid of the market turns that may happen in the future, may or may not happen in the future actually. And that also goes into my fourth point. You never want to be consumed by fear. And one great way, like I was saying before, not to be consumed by fear is to have an expertise in something and knowing what you're doing, having an actual financial plan set up. So whether you hear some type of financial guru or some type of financial expert, there's plenty of people that are gonna have their opinions. You might hear some billionaire like Mark Cuban. Nothing against Mark Cuban. I like some of the things he says about finance and investing and all those type of things. He might be talking about a stock market crash that might be happening in the near future. But at the same time, if you have your goal, you have your knowledge on what you're investing in, you shouldn't be worried about what any financial guru says about what's going to happen in the stock market in the next 1 or 2 years or anything like that. Because at the end of the day, if you have a long-term goal and you're investing into something that historically hedges against inflation, like real estate or the stock market, if you're investing in good real estate or good stock market funds, you really don't have to worry about what happens in the next year or two with your stock market or real estate that you're investing in. So it's really important to understand what you're investing in and just be willing to take the risk by having the proper knowledge needed in order to make adjustments over time. And the thing is, that's all what it is about. If you really want to get out of that fear, you need an expertise, you need some sort of knowledge base about what you're investing in, so you could feel comfortable about putting your money in certain asset classes. Because the thing is, if you're not comfortable consistently investing into something, whether it's your business, stock market, or real estate, you probably shouldn't be investing in it at all. The only thing that breeds results is consistency. Whether it's you're doing a certain job, whether you're investing in a business, whether you're doing business, if you're not consistently investing or consistently learning about a certain topic, or consistently putting money into places that you know are going to grow over time, it's really not going to do anything for you. Because seriously, what is, say, $1,000 one time going to do for you in the next 10, 20 years if you're putting that into a stock market or some type of real estate fund or whatever? At the end of the day, it's really going to be a matter of how consistently are you learning about something, how consistently you are investing into something, and then over time it growing in value. Very few things happen where you put only one effort in and that's going to basically breed the results for the future. So really, to get out of that fear, that fear of like something happening or the fear of market crashing or any things like that, you just want to make sure you're consistent with whatever you're doing and you understand what you're doing by doing your research and doing your due diligence. so you can make informed decisions rather than making decisions based on fear. You never want to make decisions based on fear, and that's a lot of times what people do when you do things like try to time the market. They're scared of a market crash because maybe they don't really understand how the stock market works and the historical performance of the stock market. Because you really understand the historical performance of the stock market and you have a long-term goal of investing your money, you really shouldn't be too concerned about market crashes or market corrections. Another thing might be is maybe you shouldn't invest in the stock market because if you have a shorter term goal, maybe it's in the next year or two, maybe it makes sense to maybe put your money elsewhere because maybe you have some type of business venture or some other type of investment that you want to do and you can't really afford, say, a 10 or 20% correction in the stock market. There are still other asset classes that you can put your money in that can grow over time. I talk about a lot of that in my channel. That's why I highly recommend, if you're interested about learning about ways where you can protect yourself against market corrections, but not have to deal with the effects of things like inflation over time, I highly recommend watching this video at the end. It's going to show you a lot of insight on how that actually works. If you found some value at this video, go ahead, like, comment, subscribe. I post financial content every single week. So if you enjoy content like this, make sure you comment and subscribe to the channel. And in the description below, if you want to contact me, whether it's about some sort of financial product or financial concept that I've talked about in the past, in the description, there's a link tree below where you can contact me. And like I said, if you really want to know about how to protect yourself against market crashes but still participate in the gains, I'm going to link a video at the end that you can watch where you could learn more about how that works. And as always, thanks for watching.